I'm joined by our friends and colleagues from the Orange County Inland Empire Small Business Development Center Network. I want to just a couple housekeeping items as we get started. This is being recorded, and so you'll be able to see this on the county's YouTube channel, the Office of Economic Development. We'll share that link during the webinar. Also, if you have questions, which I absolutely know you will, please put those in the Q&A. And as you know, that's at the bottom of your screen. There's a little Q&A box. Put your questions in there, and we will do our best to answer all those during the webinar. We appreciate your participation. We've done this a few times before, and there's a ton of questions that usually pop up. And so myself or Mike Daniel or Craig or Vilma or whoever, we'll try to tackle those live and or provide links for you. So thank you again. This business resources webinar, it's one that we've done frequently over the last year or so, and updating it frequently based on the latest information on COVID and non-COVID related business assistance programs. And I think you're going to see a ton of information this morning. So we'll get started. Again, if you need to reach out to us, we'll have contact information, phone numbers, and so don't be afraid that you're not going to be able to follow up or you won't be able to access any of the speakers here today. And I want to give a special thanks to Mayor Kevin Bash from the city of Norco. He approached, he's a regional leader, and he had approached our Western Regional Council of Governments, who then reached out to us. So he's also a small business owner, and I know he asked us to put something together. And so appreciate the mayor for your leadership. And I'm not sure if you're out there today, but hopefully you are. And just want to say appreciate you partnering with us and encouraging us to share this valuable information. So let's go ahead and get started. Again, I'm with the county's Office of Economic Development, and the county offers numerous programs and resources. I'm going to go through this pretty quickly because like I said, we've got a packed agenda, and I want to give a lot of time to Craig and Vilma and Mike that are going to get into some real detailed information about some of the current information. But our Office of Economic Development, let's see, there we go, has been, for the last obviously year or so, has been predominantly working on pandemic response and economic recovery task force and a variety of things. And there's some things that we discovered that are going to stick going forward. And that's our Business Assistance Now program, which you can log onto our website, which will be at the end of this PowerPoint, that'll share information. You can virtually reach out to us, and we'll schedule a consultation on whatever your business needs are, including permitting, financing, and whatnot. You're going to see more and more webinars like this one. Before, we did a lot of this in person. You had to come to a facility. We want to get this information to you virtually. So look for more webinars throughout the year on a variety of business topics. Some of these will be in person, virtual, or hybrids. And then also we received a federal grant to provide a loan program, a small business loan program, which we need to recapitalize it because we're running out of funds, but there's some things that we're going to continue to do. Our economic development efforts span the gamut of a variety of different activities. Predominantly, one of our key components is our Small Business Development Center network, and you're going to hear from some of those experts here momentarily, but this is a key resource that's available to you. I want to say it's at no cost because it is, but you're actually already investing in these programs through your tax dollars, and you can get a ton of great information and expertise from business owners, other business owners, business experts, particularly topical. And you can just see sort of a few of the different topics that are available. I encourage you to take advantage of these resources, whether you have a new idea that you want to vet out, maybe get started in business, or you're an existing business already and you just want to, bounce some ideas, or you're having some challenges. These folks are tremendous experts. You have offices in Western County and the Coachella Valley. We've got a women's business center. We've got a tech-focused SBDC at UCR. Take advantage of it. One of the things that we also do at the county is if you're looking for a site within Riverside County, we can help you find one. We can do it. You can do it virtually on your own, or you can reach out. Sometimes you need to grow. Sometimes you need to find that first location. These are things that we can assist you with, kind of get an idea of what your business needs and opportunities are, and help you select a location that that best suits your needs. Those are some of the kind of core services that we offer. We also have a pretty robust toolkit, and I know there's a variety of different bullet points here, but everything from bond financing for manufacturers to revolving loan programs, specialized loans for people that are exporting and importing, startup financing. There's a variety of tax credits available to you, foreign trade zones. So there's a whole slew of things that your business could take advantage of. And we want to help you identify what those programs and services are. So we encourage you to reach out to our team. The county has a team. We work closely with our cities as well. They're great partners. Specifically, our international business office. Again, if you're in the importing, exporting space, or you'd like to be, we can help share, the different programs and services that support you in terms of financing. If you're importing from the ports, there's foreign trade zones and some other investment opportunities. I encourage you to explore those with us. And one of the big topics you're going to hear about today is workforce development. It certainly is a challenging situation for a lot of businesses today. We're hearing frequently they're having a real hard time getting hiring employees. We have our workforce development department that can help with recruiting, even providing incentives for training employees. There's the employment training panel program, which is retraining of existing employees. And then if you're also having to downsize, we can assist in helping those that are affected. Our workforce team is also going to be deploying an HR hotline type service here in the very near future. So stay tuned, as we'll be sharing more information on that as well. And, we don't do this alone. Our economic development efforts are collaborative, and these are just a few of the partners from the federal government, state government, private sector, different organizations and chambers of commerce. And so we do this together. You can reach out to me. I'm going to put this in the chat as well. So again, we're going pretty quickly, but I want to share my contact information. If you have general inquiries for the county, please don't hesitate to reach out to us. And at this point, I'm going to go ahead and stop sharing my screen. I'm going to turn it over to Mike Daniel. Mike, thanks for being here with us this morning.
Yeah, thank you so much for having me, Rob, and good morning, everybody. We are going to cover these topics that you see on the screen. We're going to go through the most current updates of PPP, EIDL, just explain shuttered venues, restaurant revitalization and where it's at, the Employee Retention Tax Credit, the California Relief Grant. Vilma's going to get into HR issues as you reopen your business, as you bring your employees back. There's a lot of issues that are going to come up around that, and some things that are being weighed on as we speak and may have some more clarity later today. And Vilma is an expert in this. She's been with us on a lot of different programming pieces we've done over the last year to really let people know what's going on. And then lastly, how to connect with us. So with that, I'm going to turn it over to Craig Russum, who is our finance expert, and he's going to talk all about PPP, EIDL advance, and shuttered venues. But ultimately, I think we're going to get into a lot of forgiveness and what's currently happening to businesses as they go through that first round of forgiveness, getting into the second round. But with that, Craig, I'll turn it over to you to share your screen and to go through anything. And please ask questions as we go through this. There's a lot of information here, and we want to make sure that we're addressing the questions you might have.
Thank you, Mike. Thank you, everyone. Good morning. Craig Russum from the Orange County Inland Empire SBDC here to talk a little bit about all the various programs that have been here since last year. Some have been updated, some are starting to expire. So first and foremost, my contact information is in the chat. Please feel free, email me anytime. Within 24, 48 hours, I'll be sure to respond and get you the answers that you're looking for. What I do every day, this is just one of many sites and stuff that I go to. I go to the SBA site directly, and I'm going to drop that link into the chat for you to see, because these programs are changing all the time. There's updates. We're following what's going on out in Washington, where funding is available, which programs are set to expire, which ones are going to continue. And so you can use me as a resource, and you can also come to the SBA.gov site directly and click on the various programs to try and get more information. So I'm going to prioritize a few of the programs here to talk through. The Paycheck Protection Program, which unfortunately did expire as of May 31st, 2021. So this was the Paycheck Protection Program that was implemented last year through the CARES Act to help keep employees employed, keep your workforce involved within your business and part of your recovery effort. There was a round 1 and a round 2. Unfortunately, as of May 31st, they are no longer accepting applications for this program. Most notable though here, if you are still working with a lender, there may be an opportunity to still get funding. The way that the rules were written, the SBA has another 30 days in which to fund those applications that may still be in the queue. It's something where you're going to have to communicate with your lender. We get with them today, talk with them about where the application, where the status is. Is there any possibility that it can still get pushed up to the SBA to try and get a loan number? It may be too late, but it's worth at least trying to put some pressure on the lender. That relationship is going to be with that whoever the application is with. So unfortunately, the SBA isn't going to help be able to expedite for you. It's got to come from the bank or the lender that you're working with. Mostly what I'm doing these days, it's working on the forgiveness component of the PPP. What made this loan, and it is a loan on the books technically, unique is that it had a forgiveness component. So if you spent the money appropriately, at least 60% on payroll and a 40% on other items like rent and utilities, then you could apply for forgiveness. I'd say most lenders, 99% of the lenders have their forgiveness portals open for round 1 and also for round 2. So just note, you have to do it one for each. So if you did receive 2 PPP loans, that you have to apply for forgiveness independently of each other. So you can't combine all the information. So round 1, you could go on to your lender. Again, this is all going to be done through your lender who's ever servicing your PPP loan. It may not be that original application that you sent in, over a year ago, because they were able to sell these loans on the open market. So it's caused a little bit of confusion there. But you will apply for forgiveness with your lender and work through their portal to ultimately get a decision from the SBA, in which case then it will be relayed to the lender, and hopefully you see 100% forgiveness. And this would be principal and interest that was due on that loan. And for some of you, you may have started to make payments even on this PPP. You would be made whole on that as well if you see 100% forgiveness. Now, 8 weeks, so it's a minimum of 8 weeks from funding on the PPP 2.0. So if you did receive a second draw, you could start applying for forgiveness after an 8-week timeline. And again, this would all be done through your lender. A couple of strategy pieces with this is that I highly recommend, that you can go to the SBA's website and download the 3 different types of PPP forgiveness applications. And I recommend that you grab all 3 only because there's some information on each of them that's good to know. One, for those of 150,000 or less, there is the S form, the 3508S that you would use. Most notable though, as I always bring to people's attention, is that even though this is a very simple form and they're not even requiring documentation to submit at the time of forgiveness, just note, those loans of 50,000 or more are still being held responsible for FTE and wage reduction numbers. Okay, so in case of an audit, which it's a 4-year time period on this for an audit, that just note those loans at 50,000 and over still are being held accountable on your FTE and wage reduction numbers. What does that mean? Well, it means about having the payroll documentation available, doing some math, and having it, throwing it into your hard drive or putting it on a thumb drive so that you have it. Let's hope you don't get audited, but 3.5, 4 years from now, if they do come around, you have that information. I also highly, highly recommend the AICPA's forgiveness calculators. So you can go to the AICPA website. You can sign up for free. They just looking for a name and an email address, and you'll have access. or you can email me and I'll be sure to get you a copy of this Excel sheet to help you through the forgiveness applications and understand what kind of numbers and what you're going to need to have on file for the next 4 years. Okay. Really important that you take just a little bit of time. I know even for those $10,000, $15,000 PPP loans, I still recommend that you take a little bit of time, print out that information and save it so that you have it for your records. Because what we're seeing is that the SBA is doing some spot checks on those original calculations that we did back in April. And, if there's some discrepancies, the SBA is coming back and asking for some clarification. So we know the SBA is looking. And so it's worthwhile to have that information up front and ready to go. So if any questions about the forgiveness process, please email me. I'm happy to work through this with you. I know Paula Roberts, I made a note about the lender said that they were out of funds as of May 4th. So what that's all about is the original larger lending institutions, think your Wells, your Chase, your B of A's, they had a certain bucket of funds available to them. And the CDFIs, the community development financial institutions, or those smaller community style lenders, had a separate bucket in which they could lend out of. There were still funds available through the CDFIs, but like I said, unfortunately, they stopped taking applications as of May 31st. So there is still a little bit of money left, and the SBA still be funding loans through June. Okay, for some of those folks who are still in the queue. All right, next up, I want to talk about the economic injury disaster loan. This has caused a little bit of confusion as to is it still ongoing? Is there a second opportunity in which to apply? And so I want to try and clear some of this up. The economic injury disaster loan in itself came about as part of the CARES Act last year in March, early April, to try and help offset our basic sales, general, and administrative type costs of our business. The original loan calculation was based on about a 6-month worth of your sales, general, and administrative type costs. It is a loan. It has to be repaid. A lot of questions I get, I have not even heard whispers about this portion or this program being forgiven. So it is a loan. It's a great loan, 30 years, amortization, 3.75% for the for-profit, 2.75% for the nonprofit businesses. So an incredibly attractive loan, but it does need to be repaid. Okay. What they did, the change in this program that happened in early April is that they changed the math. So instead of 6 months of economic injury, what they're looking at now is a 24-month of economic injury for the economic injury disaster loan. And those that had this loan on the books prior to December 27, 2020, you have an ability to go back and request from the SBA a review and an increase of this loan. In essence, a 4-fold increase. So if you had a $150,000 loan, which was the maximum, because they were running out of funds, they did a max loan of $150,000. You may now be eligible up to $500,000. Okay, so what's that process look like? You do not go through the usual website. Okay, so you do not come here and reapply for those funds. Okay, you need to go through your portal and request that you be considered. Okay, this is the email address that you would send your request to. They're asking for some really basic information, your loan number, application number, which can be found on your EIDL docs. Okay, some name, business name information, that's it. They're not looking for documentation yet. They're not looking for your history of your business, no explanation. They just want some really basic information to get this process started. Okay, so recommendation then, always. So if you email me and if you have questions about your EIDL, I'm going to ask you if you have access to your portal. And I'm going to drop this link into the chat. This link will take you to your EIDL portal. Why is that important? It's because I can see everything there as far as where you are in the process, if you've been denied, or if you've been accepted. Okay, so here's a screenshot of your EIDL portal. It tells me you were funded prior. Okay. Since I set the request for additional funds, I now have a blue button here where now I can work through the process. This is where I initiate the documentation process to be considered for a loan increase. I click on this blue button. I answer a few questions. I sign a new 4506T, which is your request for transcripts, okay, for 2019. And I start working through the process. Once I click through the blue button, then my screen is going to look something like this. Now, this is a different applicant, okay? This loan amount, I believe, started around the $13,000 or $15,000 mark. And now they're going through the process of modification. And this is a true modification. They're going to add the numbers together. Okay, why is that important? Is a couple things. One, at $25,000, they're going to issue a UCC. Okay, it's a filing against all of your business assets as collateral. At $200,000, you'll be required to sign a personal guarantee. So if you had a $100,000 loan last time and you're requesting an additional $150,000, okay, you're going to be at $250,000 total and will be required to sign a personal guarantee. Some folks are uncomfortable with that, and so they're looking at, okay, I'm going to stick at 199.9. Okay, so just understand that they're going to add the loans together, and you're going to be then required to either have a UCC filing at $25,000 or at $200,000. It is a personal guarantee. Also to note is that there was an extension or on the deferment of the original economic injury disaster loan. Okay, so for instance, on a $60,000, it was originally a 12-month deferment. Sometime, I believe it was early March or late March, they indicated it is now a 24-month deferment on your original EIDL amount. Okay, you're not going to see this anywhere on your documentation. Some folks received notice, others didn't. Just note that it's true. You can wait, but it does continue to accrue interest every single day. So on my example here for $60,000, you can see my payment will go up from $290 to $293 to $311. And I will see another couple $1,000s in interest if I decided to continue to defer it. It's really up to you. We look at this from a cash flow basis. Is it better to use that $300 for something else for my business? Other debt to pay? What do I need to do with that $300 versus deferring it and seeing it accrue in interest? Okay, so just important to note. Now, if you do get the loan modification, your payment date will still be the same here. Okay, so just note that we did see an extension on that first payment date. So for many of you who got funding last year, you may think your payment is due here May or June, but we do have another 12 months. Along that same line here, I want to share a couple of pieces here. The targeted, a little bit of confusion here, what this really means. This original advance was based on the number of employees that you may have indicated on your application. They were going to pay $1,000 per employee up to 10. This program expired sometime early July of 2020. The next round of stimulus did see an additional $20 billion that was put into this fund to try and make folks whole or up to that full $10,000. Since then, another $15 billion has been put into that fund, so we now have $35 billion in this targeted EIDL advance program to try and pay, in this example, an additional $8,000. This is an invitation-only program from the SBA. You need to check your email. It's going to be coming from targetedadvance@sba.gov. Yes, it's part of the economic injury disaster loan program, but it's kind of a separate grant program. This money did not have to be repaid. Okay, some of you may have seen that initial, like an instance, this company saw $2,000 just hit their bank account back in April when they first applied. This company got the full $10,000 when they first applied. And so they would not be eligible for the targeted EIDL advance, but just wait, there is another program, the Supplemental Target EIDL Advance, that I'll talk about here in just a moment, that they may be eligible for. So we have 3 separate programs all through EIDL. And so if you did get this invitation, I recommend that you go ahead and fill it out. There are some eligibility criteria that's to note. One, you had to be located in a low-income community. And people ask, okay, what does that mean? Well, per the SBA, they have a map that we get to follow. The purple is considered low income. The yellow is not. Whether you agree with the way the lines are drawn or not, it's unfortunately what they're going by. You know, I get plenty of folks showing me all the multi-million-dollar homes that are in these low-income communities. And that's just something, you know, we have to bring up with the SBA or who's ever drawing these maps, or something that we need to discuss with our elected officials and figure out, okay, why this map or how it's being drawn. It's a different, totally separate conversation to have. Just note, this is what the SBA is using in order to determine whether or not your business is located in a low-income community or not. Now, my recommendation is still to send in this application, even if you look on the map, because as we know, these programs continue to change. More money is put into them. They change the rules. We don't know how many folks are going to actually be approved under these three eligibility criteria. What if they don't spend through all the money? Maybe they drop this low-income community piece. We don't know. So my recommendation is go ahead and apply through their program. Just note, you are going to have all of your top line data for 19, 20, and 21 as you work through this process. Okay, so you may or may not get denied. You know, as I was showing here, that this applicant went ahead and submitted the application, but ultimately they were denied because they were not located in a low-income community. Even though they had a 30% top line reduction, didn't matter. Okay, so on top of all of this, we actually have a third program in the economic injury disaster loan called the Supplemental Targeted Advance, which has even stricter eligibility criteria in that now you have to prove a 50% economic loss and have 10 or fewer employees instead of 300 or fewer. This is an additional $5,000, which is a grant, okay, that may be eligible for. If you were approved for the targeted EIDL, then you may be, they will consider you for the supplemental. So again, it's an invitation-only process. If you got invited to the targeted advance, they will consider you for the supplemental as well. Okay, so 3 different programs within the EIDL. Lastly, and I'll just go over this briefly. I know I'm talking a lot here on these 2 programs. The shuttered operators, the venue operators grant is still available. It's recommendation here. If you don't know about it, please email me. I'll try and help you through the process. My recommendation is to go to their website, because I need you to download all of the PDFs, the questions, the checklist, and the user guide, all 57 pages of it, and try and understand how you can then apply. But this one is still available and open. So if you feel like you fit the criteria of live venue operators, theatrical producers, live performance, museum operators, motion picture, and talent representatives, if you feel like you fit into one of those categories, you may be eligible. And it's a sizable grant. It's 45% of your 2019 top line gross revenue. And it is a straight grant. This is not a loan program. So still available. Really interesting program, you know, how it's being based. And the challenge with it has been fitting folks into this criteria of eligibility. And there were a few hurdles in order to jump through in order to apply as well. You needed to have a SAMS account, DUNS number, some architectural drawings, and a lot. So it unfortunately was complicated to the folks. Some folks stayed away from it, but I do have a dedicated SBDC consultant on this program. So if you have any thoughts that you might be eligible, please reach out to me, and be sure to get you in touch with that SBDC consultant to talk through that program. Thank you, Mike.
Perfect. Thanks, Craig. So I'm going to go through some additional programs in just a second. So I could share my screen.
Hey, Mike, I just wanted to jump in real quick. Craig,
Oh, sure.
there's a variety of questions, as you can imagine, in the chat. And so, folks, if you could just be patient for a minute while Craig catches his breath, and I know he's really good about tackling.
I'll start typing. I'll start typing and give
Thank you very much.
Thank you.
Yeah, and Craig is always available via phone, via email, if you're not getting your complete answer, answer that you feel you need during this presentation, he has a whole team around him that, are all skilled in understanding some of these pieces. And, ultimately there's issues. We do have ways to go into the SBA or to go to other places if we need to. So with that, I'm going to cover a lot of programs in a very short period of time. So we give more time to Vilma, which really I think is where everybody should be focused on right now, which are HR issues. So the Restaurant Revitalization Fund, if you happen to be a business that applied for it, they are still vetting businesses. There was roughly $28 billion of funds for this program, and you could qualify for up to $10 million as a grant. And it's really future facing, right? So it's the loss that you sustained from COVID, but you can spend the funds through 2023. Businesses that are in the queue right now, they're going through them. If you are stopped at the IRS check, now you can go directly into the portal, see exactly where you're at. There's a little bar that tells you what stage you're at. If you are stuck at the IRS, that means that you didn't meet one of the pilot phased focus factors, either woman-owned, minority-owned, economically or socially disadvantaged. So you wait until they all have been vetted through for the first 21 days, and then they'll open it up to everyone else. I can also tell you that they are going to run out of money. They are actually already have, as far as who they're funding. Don't be discouraged. We're already hearing, Senator Ben Cardin, who oversees the Small Business Committee at the Senate level for the U.S. Senate, has already asked to put in an additional $50 billion, which would cover everybody that has applied, right? There's roughly about $75 billion of ask. And so he's asking to cover all that. Now that's going to take a while, similar to EIDL PPP, right? Where it came out slow and then you kind of saw some increases incrementally. That's probably what's going to happen to this. So if you aren't funded right away, don't be discouraged. It does take a little bit of time to get through everybody. But we were seeing people funded as early as 2 or 3 days after the program started. So it is quick. It is a grant. I've seen a few people be denied based on an invalid NAICS code or something. If you're running into issues, contact us, right? We'll try to help you through that. I have a client earlier this morning that was, they've been using a NAICS code, but it's not the proper NAICS code for what they are. We just needed to make that change, right? So we want to make sure that you have the best ability to do this. Now, if you didn't apply, this program has already closed. I'm not sure if they're going to reopen it again or not. They have a lot of people, like I said, they have about $75 billion of ask and $28 billion of funding. So they're probably not going to open it anytime soon if they are. But that's the Restaurant Revitalization Fund. I'm going to move into the Employee Retention Tax Credit, which is an IRS program, which if you're like me, the IRS scares you too. But they're actually here to help you in this regard, where if you are paying for employees, they're willing to give you up to a 50% reimbursement up to $7,000 per employee, as long as your business is operating at less than 80% of where you were pre-COVID. I know that was a lot of numbers right there. If your business is operating at less than 80% of where you were pre-COVID, you can get a tax credit for up to $7,000 per employee, right? So let's just say you have 10 employees, you paid them, and it's a 50% reimbursement of the total wage you paid. And I don't want to get too deep into this. You do need to contact your accountant to help you through this. But if let's just say you had 10 employees, you paid them all $14,000 for the first quarter of 2021, and your business operated at less than 80% of, let's say you operated at 75% of where you were pre-COVID, you could then apply for $7,000 per employee or $70,000 for the first quarter of a tax credit. If you don't owe anything to the IRS through payroll taxes, you would then get a check back for $70,000. We've seen that happen a lot, which is awesome to see. But a lot of people don't know that this exists. But it's called the Employee Retention Tax Credit. It is there for you. You can have also received PPP, EIDL, state grants, local grants, other funding. This is on top of all of that. So if you're still paying for your employees, you can still qualify for funding. So I'm going to move on from that. I'm going to move to the California Small Business Relief Grant. This was the grant that was pushed out by the state and through the governor's office. It went through Lendistry. There was roughly $4 billion that have already been pushed out. Many of you may have received it. Many of you may be put on a waiting list. Just know that the governor just asked for $1.5 billion more to be put into this program. We're waiting for the legislature to vote on that. That should be sometime this week. If that happens, then there'll be another $1.5 billion put into this program for future rounds. So if you're already in the queue and you've already applied, you don't need to go back and reapply again. If you don't know where you are, you can contact us. We'll try to find out exactly where you are in the process. If you didn't get a chance to apply, Most likely this will come online again as well. This is not open at the moment, but the minute you hear the legislature vote yes, that we want to put that $1.5 billion into this, which my guess is they do, then you'll see this program reopen again as well for probably rounds 7, 8, 9. Currently, there's been 6 rounds that they've gone through. The next program is the California Rebuilding Fund. This is a loan program through the state of California and through the iBanks and the community development financial institutions. It is up to $100,000 based on a 3-month average of your revenue. It's a 4.25% 60-month loan that you could possibly qualify for. It's pretty straightforward. We can help you through this piece and make sure that it may fit or may not fit with what you're looking for. If you got the whole $100,000, the first month you're just paying interest only, and then it goes to the full amount, which is $22.69, just so you can see kind of what the payments would be. Not as attractive as the EIDL loan. That is by far the best loan on the market, but this is another option for businesses that have either exhausted their EIDL funds or didn't qualify for EIDL funds for some reason. This may be another opportunity for your business, up to $100,000. Again, it is a loan, not a grant. So just want to make sure that you are aware of that. And then lastly, I'll just share with you real quick. This is our site. If you need to set up an appointment, you can call us. You can schedule an appointment here. You can, to make an appointment, we have 150 consultants. We have a center that's actually run by the County of Riverside and Joaquin T. Arena, who can help you in anywhere throughout the Coachella Valley. We have a center at Cal State San Bernardino that's spread throughout Riverside County and San Bernardino County. And we also have UC Riverside if you are a tech-based client looking for equity capital or looking to grow your business. We have 3 centers that can all help you along with us as well. If you're also looking for grant opportunities, and that's a lot of what people are looking for, if you click right here, we keep track of all the local grants in the 3-county region. These are the current grants that are open that we're aware of. You can click on any of them and it will take you directly to that grant opportunity. So there are still some grants that are open and there's some that are not. So, just making sure you can always come back to this. We try to keep it as updated as possible. If you're aware of grants and they're not on our page, please let us know. We will make sure that they're there, but it'll take you a direct link to that grant itself. With that, I'm going to stop and I'm going to turn it over to Velma Brager, and she's going to talk about HR issues that you need to know about in your business. As you're open, you have customers, you're bringing back your employees. She is, she's been on a lot of webinars with us. She is an expert in this. And so with that, Velma, I'll turn it over to you to go.
Thank you. Thank you very much. And good morning, everybody. Let me go ahead and share my screen here real quick. All right. Okay. Well, yes, I think we're all excited, right, that we're opening on 6/15, but just sharing some information as best practices. Just a brief disclaimer, what I'm going to share with everybody here today is really what I've been recommending most of my clients. And of course, every industry, every situation may be a little bit different. So please keep that in mind. If you have a situation, feel free to reach out directly and I'll be more than happy to help out. Again, like I said, we're all waiting for 6/15 and that's just around the corner. So we are going to be fully open, right? Fully back to normal on that day. Well, there are going to be some limitations on that if you are what is called a mega event provider. And I'll go into a little bit more details what that means. Everybody else, we're going back to normal. So we can go to the stores, we don't have to wear a face mask, right? Things like that on a personal level. What we do personally outside of the work environment is going to go back to normal. So that's wonderful. Now, if you are a mega event provider, if you're this is like a conference, sporting events, even if you're a service provider for those kind of industry and functions, please keep that in mind. There is going to be some restrictions in regards to those type of functionalities. So once again, it's not 100% going back to normal. What that basically means, if the mega event has 5,000 employees inside or 5,000 attendees, and that includes everybody, right? Or 10,000 outside, there's still some restrictions for those kinds of events. The service providers may be asked to show proof that they've been vaccinated. And again, I think the vaccination is working. That's why we're moving in the right direction. And I think we're definitely going to be opening as of June 15. But if you are having some kind of events like this, large scale, and if you're a service provider, you're part of this kind of industry, just keep in mind that you will be asked if you were vaccinated. There will be a self-assessment or attestation that everybody pretty much attending those kind of events would have to go through. So if you're attending, be prepared that that is going to be a normal process and a normal inquiry for you to be able to attend that kind of event. That also may mean on the technical side of things, if you are ordering, if you're a service provider that has that kind of services, keep that in mind. You're going to have to figure out how you can make that happen for somebody purchasing tickets or the same day event to have that self-attestation. So that's going to take a little bit of time. So that is for the normal place. All of us can go on our lives normally. As the employer, I want you to keep in mind that you still have to follow what is called the emergency temporary standards, and that's through Cal OSHA. Cal OSHA is actually meeting today, June 3rd, to review these emergency temporary standards to see if there will be any changes. And if they are, hopefully they'll be communicated, and it'll be communicated pretty quickly because we're just around the corner. But until then, I want to remind everybody, you as the employer have a right to assess your workplace and determine what is safe for you, right? Whether you have these emergency temporary standards or not, I think after 6/15, you still need to adhere to the ETS, but you can also consider at the end of the year, you can still have your own policies and protocol, okay? A quick reminder about what is Cal OSHA and ETS. You still have to communicate with all your employees and your preventative measures regarding COVID-19. If there is any type of hazardous regarding COVID-19, you have to identify it, you have to evaluate it, and you have to correct them. You still have to have the 6-foot distance for social distancing in the work environment. You still have to use the face covering. You're going to have to still have and identify engineering controls to minimize that COVID-19 virus, right? So all of these items are still applicable, and they will still be applicable through at least July of this year. Now, like I said earlier, they are meeting today. So at the end of today, I'm sure and I'm confident that the emergency temporary standards are going to change. What they look like, we don't know yet, okay? So based on that, I want to also remind you if you have an outbreak. So the ETS requires you as the employer, if you have 3 employees that come to you and they told you they're positive, whether it was at work or outside of work, and you have 3 within a 14-day period, you are required to report that to your local health department, right? So in the county of Riverside, you will need to report that in. You can generally report it through a website. Web technology has improved that process. Now, if you have a major outbreak, guys, you also need to understand what that means. That means if you have 20 employees total in a 30-day period that came to you and they say they're positive with COVID, that's called a major outbreak. And you need to immediately report that. You also need to provide testing for all of your employees at least twice a week. You have to consider the ventilation in your work environment. And you have to determine, because that's a major outbreak, respiratory process. The respiratory process is not easy to go through. It's expensive, but you have to determine whether you have to have require your employees to have respiratory mask in the workplace. So hopefully nobody has ever, and hopefully you will not have any major outbreaks, but keep in mind, I think I want to drive this across, that although we're opening June 15th, as a person, you can go anywhere and do a lot of things normally as you did before. In the work environment, the ETS is still applicable. And I believe it's going to be applicable until the end of July. Again, that may change as of today, after today, but until today, right now, this is still something you need to consider, okay? Here's some recommendations, and the recommendation is really to keep up to the updated policies and procedures that our government, state government, and agencies are recommending employers to follow. Cal OSHA, I think that's going to be the most visited website today and tomorrow to determine what updates have they, updated on that ETS. I get quite a lot of questions about the employees themselves as to what should I do for this or what should I do for that. For example, even after June 15th, somebody comes to you and tells you, I don't want to wear the mask at work anymore. You will still have to determine whether that's still applicable with the ETS guideline or the changes to that guideline. I've got quite a lot of employers saying, well, can I mandate the vaccines? Yes, you can. Absolutely. However, if you mandate the vaccine and you have employees coming to you, whether it be a religious belief, medical situation, that they do not want to take the vaccine, you have to keep that in mind and go through a process of identifying what would be the correct form of action for that particular situation. So you're going to come across quite a lot of different situations like that. Also, many of my clients are doing it voluntarily. They are asking employees to voluntarily get vaccinated. Now, everybody is doing it? Not really. I think most people are taking advantage of the vaccination, but you as the employer, can you ask whether to verify somebody got vaccinated or not? That's kind of a slippery slope, type of approach. So if you can't mandate it, I would never suggest to mandate verification that somebody took the vaccine, but you can request it. Requesting something like that, I think it would be the best approach, especially if you have not required it. It was a voluntary approach prior to that. The other thing I want you to follow is the California June 15 guidelines. These are links, and I'll be more than happy to share for whatever reason it's not coming through well in the presentation. But I also want you to keep in track of your local ordinance. The department and the health department really has a lot input in regards to your work environment, and they would change that every so often. So once Cal OSHA kind of reviews the ETS guidelines after today, I would suggest you also need to look at your local ordinance and based on the county and city that you're in to ensure that if they do meet, if they both match, that's wonderful. But if they don't, you need to assess how to approach that in your work environment. I am also suggesting to all the clients I have, do not remove any of the partitioners, any of the plexiglass that you have right now, because you just don't know what August may look like, okay? And you have every right to assess that. That is your work environment. And the goal for an employer at this point in time is to maintain your employees safe. As well, if you are a retailer or a restaurant, you're anybody that is coming in, your customers, right? So please keep in mind that even though we're opening on June 15, doesn't mean everything goes back in the trash, everything goes back to normal. You still have to follow the ETS guideline, and I would highly recommend to not throw away any of those wonderful plexiglass that you've been using for at least 30, 45 days from June 15th. And with that, that's all the information I have for you all today.
Perfect. Thanks so much, Vilma. That was great information. And, obviously we all need to be thinking through how we're going to bring our employees back and how we're going to treat our customers. So there's a lot of information that's going to come out today that may go against what the June 15th mandate is to reopen. So we all need to understand the laws of how we have to manage our businesses. So thank you.
And Vilma, there's a couple of questions in the Q&A, if you don't mind taking a look at those, please. And
Absolutely.
One of the things that I want to address, Mike and Vilma, is, and I put this earlier in the chat, and hopefully you all saw this, but it was the link to the California Department of Public Health, basically the state's what they call beyond the blueprint for industry and business sectors that is effective June 15th, which you've heard reference, and many of you are probably familiar with it. But essentially what that means is that the colored tier system that we've been sort of living under for the last several months is going to go away completely. And essentially the only areas for the most part, and again, you can look through this, that are going to have restrictions are going to be those mega events, which is what the state is calling those, for 5,000 or 10,000, depending on indoor or outdoor. And there's no capacity limitations in restaurants or retail, physical distancing. There's no restrictions. Now, the masking component is something that it's basically going to be following current CDPH guidance for face covering. So I suspect we'll know more as we get closer to the 15, exactly what that's going to look like. And perhaps some of that will be dictated by Cal OSHA and so forth. And then travel advisories look like they're referencing CDC and CDPH travel advisory. So I would encourage anybody, both in their business as well as personally, to make sure you're checking in with that. I know there's going to be, I'm sure, lots of information being shared as that date approaches, but it does show in there that as Vilma mentioned, employers are subject to the Cal OSHA ETS standards if applicable. So I absolutely agree with Vilma that you're going to want to make sure you're checking in there and making sure you're following those standards. So thank you, Vilma.
Perfect. So there's a couple questions here that we can ask out loud if that works. So let me start with one that I'm sure that's on a lot of people's mind. Vilma, this goes to you.
Sure.
What happens if a business mandates the vaccine and the employee gets severe side effects? Does the employer cover all the costs of medication?
Well, remember, in California, if you're 25 employees or more, you have the COVID-19 sick pay requirement. On the federal level, it was on a voluntary approach. And I'm only mentioning that to you as the employer because if you utilize the federal COVID-19 sick, you will get reimbursed dollar for dollar. So I want to say 90% of my clients have opted to do that, right? Because vaccination is applicable to that COVID-19 sick pay. So it all really depends. If you are mandating, yes, you should have paid for the vaccine. And if they've had side effects, if you did opt to voluntarily provide COVID-19 sick, that is also applicable to that particular scenario. Now, if you do not have the COVID-19 sick available, the employee can definitely utilize California regular sick pay if they choose to, right? And if you haven't, I think we should discuss it on the side. It really depends how long that employee has been with you. Perhaps that may fall under a medical leave of absence for that person, which tends to be unpaid, but nevertheless is an entitlement time for that employee. So they should not be disciplined because they're missing work.
Perfect. Craig, I have a question for you. If I received an idle increase, but it wasn't what I was expecting, can I reapply for a third time?
Well, like a lot of these programs, you can try, let them say no. It's the usual response in those times. I'd like to see your portal. I think I responded to that individual to email me because I really want to see the screenshot of the portal will help me better understand. And then also when you do apply for an increase, what they're looking at is your 2019 tax returns, which unfortunately we may not have had last year back in March and April when we were applying for the original EIDL. So your numbers might have been wrong. I don't know. And that'll help me better understand, as I dive deeper into what your 19 tax return top line revenue was, your cost of goods. So they're going to redo the math and ultimately make that determination on the increase based on the actual 2019 tax return numbers. So any of that information will help me try and work through that with you.
Perfect. Let me go through a couple other questions. For the EIDL advance, people have been waiting a long time to hear back. Do they just need to sit back and wait, or is there somebody that they can contact?
I'd say most instances, there has been a determination one way or the other, but they didn't get the response from the SBA directly. So my usual, this has been 95% effective, is getting access to the portal. And sure enough, there'll be something like this that they'll see denied. Okay. They were pretty quick about turning these things around. They just weren't letting you know via email or any other way except through the portal. Then from here, there is actually a way in which to have it reconsidered. So part of this process, if you ultimately were denied, just note that part of that denial, and see if I can find what that language looks like, but there's an email that you can send to them, targeted advance reevaluation at sba.gov. So if you did get a denial and you don't know why, you never got that letter, just note you can send this to them, and they'll take a look at it again and make a determination.
Okay. And then one more question, Craig, that I've seen pop up a couple of times, not just here, is the EIDL loans will ever be forgiven?
It's a wish. I know it. I've been in the lending business. Gosh, I've been a licensed broker since 2006. And so what I've been waiting on is this deferment period to end. because that's going to tell me a lot. It's going to give me a better indication of, what ultimately is the default rate on all these idles. Unfortunately, fortunately or unfortunately, depends how you look at it, they pushed it another 12 months. And so I really think the SBA from next year, once we get a better indication of how many folks are actually paying on this thing, who knows? And maybe they're going to have to reevaluate this program moving forward if folks ultimately aren't making payments on this loan. But unfortunately, as of today, there hasn't been even whispers on the original idle ever being forgiven. We do have time, given the extra deferment date, but it does continue to accrue interest. And from a straight amortization standpoint, I don't know how it can be any better. We're already at 30 years, 3.75%. But as I say, we've seen these programs change over this last year. All I can do is go by today's rules and where we're at.
Yeah, and if I could just add one more thing to the idle portion of this, the idle program is not a new program. It's been in existence for 50 years. And it's really meant for disasters, right? That's where it came from. When there's a hurricane or there's a tornado, that's when SBA goes out and they become a direct lender. So this program is not new, and they've never forgiven it in the past. So most likely this program will not be forgiven. So I wouldn't be expecting that.
Yeah, the change on that, it's usually right. The tornado in Tennessee, and it's more physical damage. They added this economic component to it, which due to a pandemic. But yeah, this program's been in existence 30 plus years or something. So it's
it's been around a while. So question for you, Rob. Somebody was asking about the Business Ambassador program and if it's still available, and how would I connect with it?
Yes, and we answered that too. It's actually the program, and I know I breezed through the first section, but if you want to reach out to us, you can. It's a real quick online it's not even an application, but just fill in a few entries and we'll reach out to you and you can mention what type of information that you're looking for. Or of course you can send an email, which I've already received a few from you already. So thank you for that. But yeah, it's a collaborative effort with our land use and permitting agencies. But we also offer other services to assist business, whether they're in the county areas or city areas as well. And like I said earlier, and so thanks for that question, Mike, we collaborate and work very closely with the cities in Riverside County. We have great relationships with them. So if you're looking to grow in a particular location and you're not sure what to do, how to go about it, we can talk you through that and work with you to assist. So those are kind of the ongoing programs and services. So Mike, I'm going to kind of throw this one back to you now.
Sure.
A lot of what we've talked today is obviously disaster assistance related or special programs related to the pandemic. And I shared some of the other things that you do, but you've got a whole slew of consultants and resources that are available to these folks that are sort of what we call the regular programming, so to speak. Can you touch on that a little bit? Same group that you're talking to today, and many others, but what about your regular stuff that you offer?
Yeah, no, absolutely. Yeah, thanks for that softball, Rob. So we have 150 consultants. Most of us are either business owners or business experts, here to help you, think of new strategies. If you want to take your business online, if you want to figure out how to drive more customers into your business, right? As we're trying to figure out the digital landscape, we've helped a lot of businesses kind of rethink that, right? Just so you have a digital presence. So I could type in Google, hey, looking for, a sock store because I need some new socks. Well, if I can't find you online, most of the time I'm not going to be able to buy anything. Doesn't mean you have to sell online. Just means that you have to be, current with where you're at, where you want to rethink your pricing or create new channels and new avenues. That's what we want to help you with, right? If you're sitting there with your lease and maybe you need to kind of think through, how do I renegotiate this? Well, I've been unsuccessful to date. Maybe we can come in and try to help you think through some strategies of doing that, or what you're charging, right? Your price points or your costs. That's where we come in and really want to strategically think through this and grow your business through over the next 6 months, a year, 2 years, and really kind of put together a plan with you. That's where we fit. The great part is that we don't charge you for what we do. It's already been paid for. So we come in, really our only goal is to help you grow. And, our strategy is to really kind of think, how can we increase your revenue by 10% and decrease your cost by 10% to make you a much better business? That's what we're going to take a look at. And that's kind of where we're going with everything that we do.
And Mike, I know you put this information in the chat
Mhm.
earlier, but I don't know that everybody's been able to scroll through it. But can you make sure you put your website up there? Because one of the questions that came up, which is perfect, and I actually didn't see it until now, but it's related to this, is if somebody's trying to start a business, who do they contact? And the SBDC, the Small Business Development Center network, that's your sweet spot. And I think, Mike, thank you for posting it. So don't hesitate to reach out to Mike and his team. It's a great resource.
Absolutely. Yeah. And with that, I would say, contact any one of us. There's no wrong entry point. We'll get you to the right people. But, thank you, Rob, and thank you to the County of Riverside for including us in this presentation. And
absolutely. And one of the things I wanted to, I know it's been asked a couple times in the chat already, this will be available probably later today. I'm going to put pressure on our IT team, but this will be on our county office, Riverside County Office of Economic Development. I did put the link in the chat earlier, our YouTube channel. So this entire webinar will be on there. But again, do not hesitate to reach out to any one of us. And not just for, COVID-19 or pandemic related items. Again, there's a whole slew of services that the county provides, our SBDC, other partners that aren't here with us today, that I always use the phrase, if you don't ask, you don't get. And that's, we love to hear from you, and then stay tuned on a regular basis through our social media channels, because a lot of this is going to be updated through Twitter and Instagram and Facebook. We post regular updates. So when a new program opens up, or there's a round 7, 8, or 9, or whatever the case may be for some of these different programs, we're going to push this out through our social media channels and e-blasts. And we would love to make sure you're receiving that information. And I think there was a question, which is this recording only for California, or can we share this with other states? Hey, once it's up on our website, you can share it to your heart's content with anybody you want, anywhere. Of course, some of these programs and services are just available in California. Some of the federal programs are available throughout the entire country. This has been nationwide. I think Craig mentioned and Mike mentioned that the EIDL program has been around forever, typically, and including in Riverside County. You've seen these programs deployed when there's been, in our case, it's typically been a fire or a flood, something along those lines, and it's been in a either county-wide, but usually it's a specific area that's been impacted. This is different because it's been economic injury. It's been a kind of a completely different animal than what we've seen before. But absolutely, you can share it with whoever you like. Anybody that we can help anywhere, we certainly want to do our part. And I'm going to put, somebody asked for my information. It is in the chat, but I'll just put it in because I know there's been a lot of other stuff, and it's hard to find exactly where it is. So Mike, any other thoughts on your end?
No, like I said, I think things change daily. So making sure that you're staying current, you can go to, Rob in the county, you can come to us at the SBDC. Things change all the time. So just make sure that you're staying current, because there are new programs coming down the pike. I think you're going to start to see a lot of funding roll into cities, counties. I think you're going to see another round of, programming coming out, not necessarily just straight grants, but I think you're going to see some other interaction that the municipalities are going to play in this as well over the upcoming months. So, just keep your eyes open, and, we're all here to help you through this. And, I don't know when this ends or if it ever does, but, I think we're all kind of at that point where we're trying to think differently. I think some of us are trying to see customers come back into our stores, trying to see people spend money, which is a good thing. Now let's just be successful in getting them to spend more. So
excellent point, Mike. And I'll close it out by saying, yes, definitely pay attention, because, we had the CARES Act money that came down, and that funded a lot of the programs that you saw from local jurisdictions, grant programs and whatnot. And now you've got the America Rescue Plan, which was signed into law earlier this year in March. And cities and counties and states are trying to figure out how that's going to work. And there's more detailed federal guidance on what we can and cannot do. So we're trying to look at how we put that money out on the street and what types of programs and services. So again, goes back to what we were saying, is just stay tuned into these various social networks, into these e-blasts, these organizations. because there more than likely will be other programs coming out. And then there's stuff that's being considered by the federal government today that we're not even sure what that's going to look like, because there's just a ton of money coming down from the feds and the state. So stay tuned. Thank you all very much for your time. And we appreciate our panelists. Thank you, Mike, Craig, Vilma, appreciate your time. And stay tuned for more information. At this point, we will go ahead and conclude the webinar. So thank you.